Good everyone, Les here from BG Trading. I hope you are well. Today is September 18th, 2023, and this is a market update of the S&P ASX200, which is the top 200 company index here in Australia. We're going to share our thoughts. We're going to discuss a little bit about the chart formation and some macroeconomics facts that could be affecting our index here, and why the market hasn't been moving in a clear direction for quite some time. If you haven't been making enough money out of your trades, or not as much as you did last year, you're not alone. This has been a very challenging year. When we have a challenging year ahead, potentially the following year could be better. But we want to first understand whether the market could collapse or could even actually break out from the current level towards the upside. I'm also going to share a little bit my thoughts on how we trade in this market with good quality companies instead small and mid-sized caps that are more speculative. Let's have a look. Before we start, I would like to invite you to become a member of our free Facebook community. We call that Buy and Grow Sales Strategy for Share Traders. I will be putting the details in the description below. We post a lot of great quality content, including some stock analysis, some articles, and fantastic conversation with our members about stocks that could be trading at the buying area, has a good fundamentals, and could be a potential opportunity for us to chase 20 to 40% using BGS20 strategy. This is all about BG trading. Also, want to let you know that we have online trading courses here. And if you want to learn this strategy, the way we trade, I would like to take a look at Trading Mastery, which is our ultimate online trading course. You learn all about BGS20 strategy, you learn understanding the technical aspects and fundamental aspects of the company, the key fundamental metrics that you need to look into a particular company in order to make the right decision. Very, very important. Now let's jump straight into what's happening with S&P ASX200. First thing, I like to add all the indicators that we use for BGS20 strategy into the display. So you can use the Hikinashi. The Hikinashi obviously gives us a clear understanding of the momentum. In this case, as you can see right here, momentum towards to the upside and momentum towards the downside. It's kind of a war in between the green candles and the red candles. A very, very powerful tool. It gives you the momentum of a particular movement. At the moment, although S&P ASX200 is down by 0.6%, the momentum is still up, which means I wouldn't be selling right now in worries that we will be going further towards to the downside, because this particular candle color shows there is momentum towards the upside still until I see a red candle. And even if we have a red candle right here, you see there is this ascending support line here that we have just drawn up. So this ascending support line has been confirmed in quite a few occasions here since March 2023. And that is something that I really wanted to take a look at, because that shows that the market is actually trending slowly in accumulation phase, but trending towards a potential breakout towards the upside. Obviously, there's no guarantees in the market. The world offers no guarantee. We're just a piece of a rock traveling in space. Anything can happen. So always in the stock market. So you just got to make sure you understand at least what are the momentums and where is the inflow cash is moving towards. As you can see right here, there is also draw a hypothetical support, draw a range, which also shows a sideline range. If you look into this range, you will see there is a support level around 7,000 and resistance level on this particular range, narrow range, at 7,300. And those levels are the levels that we could be trading, okay? Even if the market falls really dramatically, so you could try pick up some of the positions right here at the bottom. Although, as you can see here, this ascendant support also shows that we are having some higher lows. This is the third time the market reaches the support level, and then we have a higher low again and higher low again. Hopefully this converts into at least these green candles going all the way towards this ceiling, or this hypothetical resistance level right there, which is sitting around 7,300, the first level, and the second level about 7,470, 5,000 give or take in intraday server description. For me, although a lot of market analysts are tipping for a potential US market crash, I always like to understand what are the stocks that build our index. Most of them are very conservative bank stocks, some very conservative, high profitable mining companies, and obviously consumer discretion and property trust. So all those companies that build the index are very solid and profitable business, or most of them at least, very solid and profitable business. That gives us a very fundamental security that even though we have a short-term downturn, where those stocks are likely to come back to these levels. But looking at this chart formation itself suggests that we have a potential breakout. We'll have a potential breakout towards the upside right here as we have this ascending support into a positive territory. This year has been a very negative year for small size caps. Most of the small caps, even iron ore, especially lithium stocks, energy stocks, they all have been coming down. And that's why we decide to change our strategy and go with good quality companies. If you look into our latest stock analysis and even video, you might feel a little bit bored about, but that's because we are looking to good quality companies that have been reporting profit and also are trading at technically discounted prices. Those companies with strong fundamentals are not a brainer. All you need to do is have a patience, and those stocks, if the company performing its fundamentals positively and the outlook for FY24 is positive, most likely will be a reward on the stock price moving towards to the upside. That's why it's so important to understand the fundamentals, not only look into the chart formation, because the chart formation in this type of market makes no much sense. So you're gonna get trapped into some classic chart formation with potential breakouts, and all of a sudden you'll realize this breakout was a fake breakout, either to the upside or to the downside. So that's why sticking with fundamental valued companies at the current market, it's so important. There's also a powerful tool that I want to share with you that you can trade with the market. Even though there's no much range here, we only have 6% from the hypothetical support to the hypothetical resistance here. But if you use a gear, which is a leverage position of ASX200, you can see that we have yourself a 16% on the same range that you had, about 7% with the ASX200. So that's why there are tools out there for you to maximize profit within those narrow range. But most likely, with those companies at the moment, those 20 to 40% needs to be held for a little while until we see a clear direction built into this ASX200 chart formation. Might take a month, maybe take 2 months or 6 months. We don't know, but we want to make sure we are positioned into good quality companies. If you look at the lithium space, for example, most of the small caps have fallen quite dramatically. Some of the stocks even reaching 80% down from its peak. early this year. However, the great quality company, the great quality stocks that are profitable, such as Pilbara Minerals, Oaken Limited, IGO, Mineral Resources, all those companies have held its share price really well in comparison to those penny stocks. And that's why, once again, it's so important to look into good quality companies at this time of the market. Okay, potentially in 2024, this scenario will change. As soon as we have some interest rates cut, if that happens, then that's when we should be looking back into small caps. Those small caps will outperform the large caps when interest rates start coming down. But at the moment, with high interest rates, with interest rates at the plateau, and even with the threat of potential further upside, so those small caps will likely to underperform. And I'm sorry to disappoint all those people that are looking at keep holding those small caps. Unless you have interest rates cut, I don't think we will see those stocks coming back up anytime soon. Always keep in mind that whatever sector you trade, you need to look into what's happening in that particular sector. Lithium stock, look for lithium prices. If you're looking at uranium stocks, look for uranium prices. Coal, what's happening with the coal markets. Energy, gas and oil, and so on. You gotta make sure you make informed decisions in order to succeed in trading, especially in this type of market. Hope that was valuable for you. And I'll be posting more stock analysis for individual stocks this week as well in the channel. Thank you very much. See you in the next video.